South Africa's three major hospital groups have all embarked on significant expansion strategies offshore in recent years. Now, Netcare, for example, has focused its expansion in the UK, while the likes of Life Healthcare have gone into India. Mediclinic has pursued a strategy in Dubai and Switzerland. Here to help us pick our way through these strategies and implications for the companies concerned is Stanlib's industrial analyst, Theo Botha. Thank you so much for joining us, Theo. So let's talk about broadly, what do you think of their diversification offshore, the private healthcare sector?
I think we have to take a step back and think about when these companies decided to go offshore, which is probably 5, 6, 7 years ago. Netcare actually went offshore more than 10 years ago. At that time, you would have perhaps looked at South Africa and thought, well, where are the growth opportunities? And you would have looked at the world and you might have thought that growth in different countries on the globe could offer better growth opportunities. Little did we know that we would have the global financial crisis and then emerging markets would offer better growth opportunities. But be that as it may, these companies all thought that they might need to diversify their portfolios and look for growth elsewhere. Netcare went to the UK, as you mentioned, and I think they had a very credible strategy in going to that market, thinking that there would be good growth. But you know, the recession has obviously played havoc with their strategy in the short term. I think, you know, in hindsight, everybody would agree, including management, that they overpaid for that business, and particularly for the kind of the hospital property side of that business. And yesterday they reported their results, and they've decided to kind of impair their investment in it's a 1.15 billion rand impairment, so it's a big impairment there. Yeah, impair the property side of the business, not the operating side of the business. So what they're telling us as investors, that in the event that the property side can't wash its face, they're prepared to walk away from that business, and the bankers would then own the properties. But they're still very, very positive on the hospital operations side of the business, and they're going to retain the investment there. Why are they optimistic about that? Because people globally are getting older, and that means that they're going to spend more times in hospital because our bodies, you know, just need more help as we age. So from that point of view, I think healthcare is a very attractive asset. Doesn't matter where you are. That's the kind of the Netcare stories.
So just on the Netcare story, I mean, one of the things you mentioned there was that they paid, in hindsight, obviously in hindsight it's always 2020, they paid too much for the acquisition, and then they used a lot of debt to acquire both the properties and the hospitals as operating entities in the UK. So from here, you know, are they kind of sitting tight, or have they got any other plans to either increase their footprint in the UK or expand across perhaps into Europe or other places? Is this going to keep them occupied for some time?
You know, I think if the UK planned out better, they might have been in different countries already by now, but obviously their investment in the UK has been very challenging for them. And as investors, we would want to see them sort of get to grips with the UK, show us that it's a profitable entity before they venture into other markets as well.
Yeah, I mean, just on the other side of the scale, you've got, you know, developed market there, but you've got Life Healthcare moving into very much an emerging market, and in an area where I suppose you're looking at very tight margins, I assume, in the healthcare space. What are your thoughts on their presence through MHC in India, that's Life Healthcare, and the opportunities for growth on that end?
Yes, I think India is a very attractive market. Lots of people, the most populous country after China. I mean, so you know, obviously a great opportunity for them to grow in, but also with its challenges. I mean, getting to know the market, co-investing with partners. Life Healthcare only owns 29% of the business. They would like to own more of it, but their partners are reluctant to relinquish control. So there are issues for them, different issues, not necessarily around the ability to grow the business. They've got big hospitals, not all of them are full yet, because, you know, a hospital doesn't start its life off being full. So the challenges for them is to grow the business, get the hospital occupancies up. That grows your profitability. But there are also issues around the management, how the business is managed, and what the influence for Life Healthcare is in that market. But I think a very credible kind of strategy for them to grow in another emerging market which is closer to South Africa.
So far so good for life healthcare, and then obviously the third big player is Mediclinic, who've kind of hedged their bets with an acquisition in Switzerland, and then obviously their operations in Dubai. Dubai, I guess you could classify as a first world country. What's their expectation around? I think ultimately what I'm asking is what are these companies expecting in terms of earnings growth and contribution to profits from their different international strategies?
I think Mediclinic has taken a sort of a more conservative, middle of the road kind of approach. They went to Switzerland. It kind of suits their style. The sort of the Johan Rupert, which is obviously an investor in Mediclinic, understands Switzerland. So does Dr. Herzog, who has had friendships with the founders.
They're taking care of their retirement there, making sure that they own the hospital. they might have to visit.
They invested in a country that they know well and understand. It's a low growth kind of business. It's not a high growth business, but it comes with less risk. We also know that they also overpaid for that business. They've had to have 3 rights issues to kind of right size their balance sheet for the acquisition that they made. But in the long run, the same kind of principle applies. People are aging, and healthcare globally is becoming a larger share of GDP. So we can't fault these companies for following the kind of the growth opportunities, be it in the UK, be it in Switzerland, be it in India, be it in the UAE. So these are kind of it's a good industry, I think, to be invested in. Different strategies for different kind of folks.
But overall, offshore exposure, a good thing?
I think so. It diversifies the portfolio. As we said, in hindsight, we could say, well, did we pay the right price? But where we sit today, gives you kind of exposure to different growth markets. South Africa, in hindsight, has probably grown faster and better than what these companies would have thought. But eventually, our market is also going to mature, and therefore kind of looking for growth opportunities elsewhere, I think, is a good thing.
Just to touch on that original premise, Theo, about the need to go off the continent to find this growth. South Africa's got a young population. Sure, we're not old, but we're getting, our average age has gone up. If you look at the last consensus, we've got a growing population. We've got a government employee medical scheme that, at my last reckoning, was massively increasing the amount of members that had access to the medical scheme. So why did they miss South Africa and Africa? Why did it? Is it perhaps the regulatory regimes in the rest of the continent and why were they so negative on growth in South Africa when there appeared to be such good fundamentals?
Yeah, I think there are a few things. I think maybe we looked. Obviously for private healthcare we need job creation. I think we might have missed the opportunity that government would be the largest creator of jobs in this last period, and that's been kind of the big drive then for GEMS. So GEMS has obviously captured the growth in the government jobs, also captured the growth in people that worked for government that weren't on medical aid. So that's been the driver of growth for the private sector. If you take the GEMS out, there hasn't been massive growth in employment in South Africa. And looking forward, when GEMS reaches its potential, which is maybe in the next year or two, we really need job creation. We need new jobs in the private sector to sustain the growth for the hospital company.
So that of course goes back to the diversification offshore. Thank you so much for joining us today, Theo Botha, Industrials Analyst at Stanlib.